Today, we're going to talk about one of the most, truly dramatic stories in modern tech. The wild ride of GoPro. It's the story of a company that flew incredibly close to the sun and then came crashing down. It's really become a cautionary tale. And just to give you a sense of how steep that fall was, you just have to look at these two numbers. At its absolute peak, GoPro was valued at an incredible $11 billion. Today, it's a penny stock. We're talking less than $1 per share. The company literally went from creating and defining an entire product category to, well, barely surviving in it. So the big question is, how? How did one of the hottest brands in tech, a name everyone knew, fall so far, so incredibly fast? This wasn't some slow, gentle decline. It was a spectacular, high-speed crash. And the answer? It's this fascinating mix of perfect timing, a ton of hype, and a series of just fatal missteps. So let's start at the beginning. The whole GoPro story kicks off, fittingly enough, with a surfer named Nick Woodman. And he wasn't trying to build a billion-dollar company. He was just trying to solve a problem he had, how to get cool action shots of himself and his buddies while they were out on the waves. The very first GoPro, it wasn't some sleek piece of digital tech. Not at all. It was actually a 35mm film camera shoved into a rugged plastic case that he could strap to his wrist. And Woodman was the classic hustling founder, driving up and down the California coast in his van, selling these things one by one to local surf shops. But Woodman's hustle ran smack into a perfect storm of timing. Two massive waves were building that would launch his company into the stratosphere. First, you had the digital revolution, which supercharged his whole camera concept, eventually letting him put 4K video in that tiny box. And second, at the exact same time, you had the rise of YouTube, which created this perfect platform for people to share all their incredible GoPro footage, which, let's be honest, was millions of dollars in free marketing. And that combination, it was absolutely electric. The products just caught on like wildfire. So get this. In 2011, their revenue was around $284 million. Just 2 years later, they were closing in on $1 billion. And here's the kicker. Unlike a lot of the tech startups from that time, they were actually profitable. They were making real money, right from the start. All this incredible growth, of course, led to the next logical step, taking the company public with an IPO. And this, right here, is where the story shifts. It goes from a scrappy startup to a Wall Street darling. And, as we're about to see, this is where the seeds of the downfall were really sown. So, the company went public in 2014, and there was just a ton of fanfare. The story that investors were buying into was this powerful idea of Red Bull meets Apple. The ultimate mix of extreme sports culture with sleek must-have tech. And the market absolutely ate it up. The stock just soared on its very first day of trading. In less than a year, the company's valuation just ballooned to a staggering $11 billion. Everybody, and I mean everybody, bought into the hype. GoPro wasn't just a camera company anymore. It was a full-blown cultural phenomenon. And all that hype was definitely felt inside the company walls. In 2014, the founder, Nick Woodman, got the highest CEO pay package in the entire United States, a mind-boggling $284 million. It really seemed like they were on top of the world, totally untouchable. But with that kind of success came a really dangerous shift in focus. As this quote hints at, the company started chasing shiny new objects. They grew from a tight-knit team of 50 people to over 1,500 employees. And the vision completely changed from just making great cameras to becoming some kind of massive media empire. But while GoPro was getting distracted by this grand vision, two major threats were gathering on the horizon. First, smartphone cameras were getting shockingly good. More than good enough for most regular people. And second, cheap Chinese knockoffs started to just flood the market, offering pretty much the same functionality for a fraction of the price. Now, the management team, they saw these threats coming, but their response was a classic case of what you'd call thrashing, just making a series of reactive, badly thought-out bets that, instead of saving the company, actually ended up sealing its fate. Really, you can trace the whole downfall to 3 specific, catastrophic failures: a flawed product launch, a totally botched expansion into a new market, and a pivot into media that just completely failed. Let's break each of them down. First up, the Hero4 Session. This was supposed to be their camera for the casual, everyday user. Smaller, simpler, just one button. But here was the critical mistake. They priced it at $399, the exact same price as their top-of-the-line full-featured camera. Customers were just baffled. I mean, why would you pay the same amount of money for fewer features? The product totally flopped, and they had to do these huge price cuts that for the first time really damaged their relationship with retailers. Next up was the drone. To try and compete with the big player DJI, GoPro launched the Karma drone. But it had a fatal flaw. A faulty battery connector meant that the drones would just lose power and literally fall out of the sky. They had to recall every single one they'd sold, an experiment that ended up costing the company a jaw-dropping $375 million. And finally, there was the big pivot to media. The idea was to become a production house, creating original content that big brands would pay to advertise against. But the advertisers, they just never really bought in. They struggled to see how a video of someone skiing was the right place to sell, I don't know, a new car. The whole division generated almost no revenue and was eventually shut down, leading to hundreds of layoffs. So after these three massive back-to-back failures, the crash was pretty much inevitable. The company had lost its focus, it had burned through hundreds of millions of dollars, and all the while, its competitors were just eating its lunch. The damage to their spot in the market was absolutely devastating. At their peak, GoPro commanded over 2/3 of the entire action camera market. After all these failures, that dominance just evaporated. Their market share collapsed to less than 30%. And the financial picture is just as bleak. I mean, even though they're still doing around $1 billion in sales, the company is just bleeding money. In a recent year, it posted a staggering loss of $430 million. They're just burning through cash. Ultimately, what happened was GoPro got caught in a classic pincer movement. You had the cheap knockoffs attacking them from the low end of the market, and at the same time, high-end smartphones were squeezing them from the top, making a separate camera totally unnecessary for most people. Their core market just kind of vanished. Which brings us right back to today. The company that once defined an entire category is now really just a shadow of its former self, fighting for survival in a market that, for the most part, has moved on. You know, the story of GoPro is such a powerful reminder that in the world of tech, hype is temporary. It cannot protect you from bad strategy or from fundamental shifts in the market. Which leaves us with one final critical question. Which of today's seemingly invincible tech giants might be forgetting where they came from and could be on track to become the next GoPro?